Good morning, traders. Welcome to the DOS Trader Morning Call video for Monday, November 16th. Just want to bring a fresh look at the markets today. We did have that horrific terrorist attack on Friday that actually led the market lower at the end of the day and going into after hours. So terrible, terrible tragedy. My hearts and prayers go out to those affected by it. Just something that's a new way of living right now, unfortunately. Back to the markets, though, we did have a movement on Sunday night. Markets did open lower and actually recovered pretty much all of its move on Sunday night. Now we're up about just a couple of handles on the ES. But I want to get into the charts, and I want to show you a couple of things on where we may be headed. Now, we talk about on Friday about putting in a short-term low Thursday, Friday, going into monthly options expiration, which is this Friday. Okay, we also coming into some seasonal strength that we've already had a big move in October. There's a lot of factors here that could weigh on the market's Santa Claus rally. So we still want to be cautious here to see if are we really getting this rally or we're not getting the rally. That's something that we're going to just continue to monitor the charts and different indicators and of course indexes to see and look for clues of where we may be headed for the next several weeks. Okay, now I want to just show you a couple of things here before we move on to our indexes. Here is our semiconductor index, and you can see I mentioned in several videos I'm looking for 650. 650 break, which we've gotten now at 643. That's not a good sign that the semis are not leading this market higher. This is not a good sign. So here's something that I want you to keep an eye on, okay? Take a look at the bullish percent SPX. Now the bullish percent, based on a point and figures chart, very, very reliable. And you could see that this is also not a good sign that the markets are still in an overbought state. Yes, they are rolling over, but they are in an overbought state. Okay, terrorist attacks doesn't help anybody, anybody, especially on the markets. It just creates a fear factor for the markets, uncertainty, and it does affect the economy. Okay, so just keep that in mind, guys. All right. Last is the McClellan oscillator, very reliable indicator I use on a regular basis. This is now negative 64, getting oversold, but not so quite oversold at the moment, okay? We need to see 80, 100. I'd love to see it get down to these areas. And then the other indexes, other indicators that I have showed you will follow suit, rolling over and unwinding the overbought reading, okay? So we need to pay attention to this. Now, getting to the index, let's get to the DOS Trader and take a look at the spiders. I showed this to you on Friday saying that we have a bearish rising wedge that closed. We need 2-day close, which we did get. This was the bear flag that I was looking for, and we did break lower. I'm looking for 200 on the spiders. 200 is going to be the line in the sand here. If we close below the 200 area, I would suspect and probably think that the Santa Claus rally is probably not going to occur or will happen very, very late, okay? 200 in the spiders, 2,000 in the S&P cash and futures contract. That's what I'm looking for, 2,000. That line in the sand needs to hold 2,000, okay? All right, so now let's go to the spider 60-minute. I showed that to you here, that we had a bear flag on a 60, confirming this bearish rising wedge, and sure enough, we broke down lower. I had a couple emails saying, well, Mark, could that be a bull flag on a daily chart? Sure, but with this bear flag confirming on a 60-minute, I went with the bearish pattern instead of the bullish pattern. Okay, so that's how you look for clues by doing a top-down approach analysis, by starting at the daily and dropping down to 60, the 30-minute, even a 15-minute chart to see any clues of some repetitive patterns here. Remember, repetitive patterns are key to your technical analysis. All right, diamonds. As you can see, the Dow Jones ETF here. This is a lagging index, which was leading. Also not a good sign, and that's what made me suspect of this rally, okay? Take a look at the transports, which is a leading. This is our leading man. This is the leading index here out of the 5 that we follow. This has not even broken the 200 since early February, okay? Not a good sign that we're starting to roll over. When the transports are lagging and rolling over, that is absolutely not a good sign here, guys, okay? Just keep that in mind, that not a good sign that we're starting to sell off here. Remember, when transports start to slow down, that means that the economy is not picking up any momentum, all right? There's not goods, products being shipped across the country here, so not a good sign. Next is our secondary leader, is the Russell 2000. Good gauge of risk. As we know, traders like to feel good about the market. They buy and take on more risk. Well, the Russell 2000 is a great gauge of risk, and also tops before the other index that I just showed you, okay? Not a good sign here that we're starting to roll over here. And lastly is the Qs. I did show you a couple days ago the components, the top 10 components of the Qs. Look out for the Apples, the Googles, Google L, the Amazons, the Pricelines. Those are the 10 components Microsoft make up and really top 10 that are pushing this index higher. When they start to roll over, heads off. Be careful, okay? Be very careful here because the heads will start to roll and this thing will roll over hard. So just keep that in mind, guys, all right? So we have a lot to digest here in the coming weeks. But let's look for see if we could put some sort of a low in going into options expiration, okay? Have a great day, everybody. Hope it helps, and we'll talk to you soon. Take care.